the name of the values that keep you alive. Do not let your vision of man be distorted by the ugly, the cowardly, the mindless, and those who have never achieved his title. Do not lose your knowledge that man's proper estate is an upright posture, an intransigent mind, and a step that travels on limited roads. Do not let your fire go out. Spark might replace the spark, and the hopeless swamps of the approximate, the not quite, the not yet, the not at all. The world you desired can be won. It exists. It is real. It is possible. It's yours.
Hey guys, welcome back to the Crypto Economy Podcast. Today we're going to go back into a little bit of crypto and tax law with someone we had on about a year ago, maybe a little more, to catch up with us about what he's been doing and any new things that you guys should know about crypto and tax law right as tax season is around the corner. So thanks so much for being here.
Hey, thank you for having me, and it's good to be back.
So to get us started, could you maybe walk us through sort of what you've been up to since the last time you've been on the podcast? Any exciting new career developments or anything people might want to know about?
Yeah, so obviously, I'm still a CPA. For the past 2 years or so, I have specifically focused on crypto taxation and related issues. Recently I joined this company called CoinTracker.io, which is a software company that helps users calculate cryptocurrency gains and losses. And also I started a crypto tax column at Forbes. So I've been quite enjoying, writing about crypto taxation and new developments. And yeah, that's pretty much it. Pretty much, working in the intersection of taxes and cryptocurrency and blockchain.
So Forbes is like a pretty reputable place to be contributing to. Have you noticed that they're taking much more of an interest in crypto recently? Are they taking it more seriously?
Yeah, Forbes, like you said, it's a great outlet. As a matter of fact, almost all of the posts that I've written to Forbes have been picked up by Coinbase News and Bloomberg and several other news outlets as well. And then, I see, especially considering the timeline we have, meaning, we are in the tax season, so a lot of people are curious about the tax implications of cryptocurrencies and, tax saving strategies or best practices. So right now it's a peak season to write about tax related content as well.
Yeah, of course. So right off the bat, what are sort of the main things that people should know this year, specifically when it comes to filing their taxes if they do hold crypto?
Yeah, so 2019 has been a very active year when it comes to crypto taxes. The IRS sent out 10,000 letters in the summer for crypto holders. After 5 years, IRS issued new guidance in the form of 45 and FAQs, and then IRS came up with the new revenue rules. So there's a bunch of activities. So the point that I'm trying to make here is that IRS is looking into this issue in a much more aggressive way compared to the past. So it's really important that you report something. And one of the questions that I get all the time is that, the rules related to crypto is very confusing. There's no way that, you can calculate gains and losses for certain transactions. But right now, what's super important is that you report something rather than reporting nothing and waiting, to hear back from the IRS. But that may be too late, because when you hear back from the IRS, you haven't reported anything, and that could be classified as, you're evading cryptocurrency related taxation. So, in simple terms, just calculate your crypto taxes, because when you trade, when you do crypto to crypto exchanges, when you earn staking rewards, when you mine, those income are taxable. Just report something and move on with your life, and that's the best way to go about it.
So are all of the major exchanges sort of reporting pretty similarly? I know with like companies like PayPal, they have sort of like $20,000 minimum reporting requirements to the IRS. Is that similar with crypto exchanges, or are they each sort of doing it in their own way?
Yeah, great question. So in crypto exchanges, especially the exchanges based in the US, so for Coinbase and Binance.us and Kraken, you are going to get a form called Form 1099K if you have more than 200 transactions, and if you did more than $20,000 worth of transaction volume. However, the problem is that the amounts reported on these forms do not mean anything for tax purposes because they only report the gross proceeds from your transactions. But for tax purposes, you're paying taxes based on your net gains, not the gross proceeds. So the point is that if you get a 1099K, you had to use some type of crypto tax software to figure out your basis and figure out your capital gains and capital losses to be reported on the 1099, to be reported on the form 8949 of your tax return. And then this is for people who get 1099K forms from the exchanges, but you might be somebody not be qualified to get a form 1099K. Even in those cases, you're still supposed to report these transactions, meaning report the gains and pay taxes on those gains. And because the U.S. tax system is a voluntary tax system, so whether you get a 1099K or not, you're still supposed to report your income.
So, if you're, someone who's incurring heavy losses, can that actually sort of work to your advantage if you haven't done so well?
Yeah, the losses could be very beneficial, especially the capital losses. You can, in any given year, you can claim unlimited amount of capital losses as long as you have, bigger amount of the capital gains. And then if your capital losses are higher than capital gains in a given year, the maximum capital loss that you can take in that year is 3,000. However, your excess capital losses can be transferred to future years indefinitely. So, yeah, especially in a situation like 2018, 2017, maybe you got into Bitcoin in 2017 when it was all-time high. So this is a great opportunity to sell some of those positions, harvest your losses to reduce your taxable income, and also quickly get back into the same position to maintain the position. So the tax loss harvesting is completely legal. There are softwares that can help you do that. And again, the losses are really good for tax purposes.
Yeah. So, what software do you recommend? Is it sort of like, hop onto TurboTax and just upload, your Robinhood sort of form, or what's the best way you think to go about it? And do you think people need help doing it, or it's something that most people can do on their own?
So the softwares like TurboTax or H&R Block, they don't directly support any cryptocurrency related transactions. So you would probably need something like CoinTracker.io, or there are a bunch of other softwares that's going to help you do that. One thing that's good about CoinTracker.io is that if you have less than 200 transactions, uh, it's entirely free. So pretty much you connect your exchanges and wallets to your CoinTracker.io account, and then the program calculates your gains and losses and produces all the tax forms you need. Um, so that's how you typically deal with the gains and losses, and the calculation of it, because it's really hard to track these transactions and do the calculations manually.
Yeah, I can imagine. Why, especially if you're someone who's trading in a lot of high volumes and uh, day trading or something like that. It seems pretty nightmarish. Um, so have you noticed that this sort of change is encouraging people to report? Do you think a lot of people are gonna still just try and sit on it and avoid any repercussions, or do you think this is sort of working to get people to start reporting?
I think uh, the changes that the IRS has made is incentivize. I don't want to say incentivizing, but it's actually alerting taxpayers to report these transactions. For example, starting 2019, this tax season, in Schedule 1 of the Form 1040, every taxpayer, whether you have crypto or not, they had to answer a question that asks whether you have received, traded, exchanged, or sold any type of cryptocurrencies. So it's a yes and no question. So, and if you really have cryptocurrencies and if you say no to that questions, that shows that you are intentionally trying to evade taxes. So, and the other thing is that even if you say yes for that question, doesn't necessarily mean that you had to pay taxes on those transactions. For example, I may be somebody who could be transferring funds in between wallets or in between exchanges. For the crypto question on Schedule 1, you had to say yes, because you have some financial interest in crypto, but that doesn't mean that you had to pay taxes on that. Uh, so, having those questions, it's kind of alerting taxpayers to be more compliant, and then especially softwares like CoinTracker kind of helping people be compliant as well. Because again, anybody with less than 200 transactions, which we believe the majority of the crypto, taxpayers in the U.S. fall into, it's a completely free software. Just plug your numbers, calculate the gains, and report the taxes in your Form 1040.
So, are there any tokens that you might have to report differently? Is there a difference between sort of security tokens and utility tokens, or do they just lump everything into sort of the same
See,
general?
yeah. So according to the IRS, IRS has come up with guidance specifically related to cryptocurrencies. So according to the IRS, cryptocurrencies are treated as property. Now, if a token is a security, obviously it should not be treated as a property for tax purposes because there are special set of rules applicable to securities in the tax law. For utilities, there are special set of rules applicable to those things with the IRS code. But most of the coins that we deal with these days, especially the coins that we see on the exchanges, most of them are cryptocurrencies. So for those coins, the regulations are pretty clear. Uh, and again, if it's a security, you had to apply those special rules. And still, if you trade those security tokens, there will be gains and loss events. But things like wash sale rules will not be. Uh, they're going to be applicable to security tokens compared to cryptocurrencies treated as property.
Yeah, absolutely. Do you anticipate any big changes to the tax code, in coming years? Have you seen anything, heard anything? Or do you think this is sort of the strategy long term that they're probably going to
Yeah,
follow?
great question. Actually, we have made multiple visits to the IRS and actually the Congress as well, because there have been several discussions around several bills that's in the works right now. Uh, what we have learned here is that for the IRS, it's easier, it's much more economical for them to treat cryptocurrencies as property because the laws and regulations related to property is well defined. So what they're trying to do is put this new concept, new cryptocurrencies into a subject which is property, which they already know. So if we go with that theory, I don't see any major, difference in laws that's coming up in the near future. Uh, especially considering the fact that these government entities they're pretty slow to move. IRS is dealing with a very tight budget. There's so many other important things they have to do. So I don't see any new rules being formulated right now. And the other thing is that uh, IRS is an enforcement agency. They don't make any laws. So if you want new laws related to cryptocurrencies, you had to deal with the Hill, you had to deal with the congressmen, you had to deal with the governments. And in order for some new laws related to cryptocurrency to be passed, you had to go through so many steps, especially considering we are going towards an election. It's highly unlikely there will be anything coming out of the Hill in the short run.
Are there any considerations with state taxes? Are there certain states that are going to be better for crypto, or is it generally going to be the same and mostly what you have to worry about is federal
So
taxes?
when it comes to taxes, most of the US states follow the federal tax rules. But when it comes to some tax provisions, we call it decoupling from the federal tax rules, meaning for when you file the federal return, you follow a certain set of rules. But when you follow certain state returns, you have to follow the rules of that state. Now, this is not applicable to crypto as of today, but as the industry grows, as certain states see certain transactions in a different way, you could have separate set of rules being applicable to same transactions at the state level. Again, I don't think it's going to happen anytime soon because before we go to the state level, the feds they have to figure out how to deal with some of these sophisticated transactions like airdrops, coins being burned, token wraps, Uniswap. There's so many unanswered things. So first, the feds have to figure it out. then it's going to trickle down to the states.
Yep, that makes sense. So have you noticed internationally that other countries might be taking a different stance on this, or are they sort of following the lead of the US in this regard?
I don't think they're following the lead, the U.S. As a leader, especially when it comes to taxation. Uh, there's some countries, especially in the Southeast Asia, they're very friendly when it comes to taxation. Some trades are completely immune from taxation. Um, Again, I'm not a expert in international taxation as it relates to cryptocurrencies, because again the definition of cryptocurrency differs from one country to another as well, and same thing goes to securities and things of that nature. So it's a mixed bag right now, but generally speaking, the way that the U.S. tax system treats cryptocurrencies somewhat hinders the adoption of cryptocurrencies, especially as a method of payment.
Sure. So, sort of more personal question. Are you someone who, trades a lot of cryptocurrencies, and as such, do you sort of think about taxes as you're trading? Do you formulate your trades sort of based on, how much you can expense or how much you can write off, or is it something that's not really in your mind if that is
Yeah,
something you do?
it's a good question. I don't trade that much. I do have, you know, positions in several coins, but when I trade, I don't have my CPA or tax accountant hat on, because when you trade, you are trying to maximize your gains, and taxes is something you had to think about. Not primarily, it's a secondary thought. And again, if you're a successful trader, like I don't think you should think about tech. I think first you had to think about how do you maximize your gains, and then you think about how do you minimize your taxes using strategies like tax loss harvesting, not applying the whole sale rules, and there's so many other ways. So that's my answer to you. Whenever you start a business or whenever you trade in crypto, just think about how do you create value, how do you maximize your gains, and then this tax should be secondary, although it's very important.
So when you're doing something like mining, how do you calculate the potential tax impact for that? Since you're not really buying the tokens, you're essentially earning them for free.
Yeah, great question. So when you mine, it's a little different than when you trade cryptocurrencies. So when you mine, you had to recognize the fair market value of coins that you earn as taxable income, and that is treated as ordinary income. That should be treated goes to your Schedule C of your Form 1040, or if you have a business return, that goes on your business return as well. So the good thing about mining is that you had to recognize income, but you get a lot of write-offs. Like if you have mining equipment, internet fees, rents, and utilities. So you get those write-offs, and at the end of the day, you're paying taxes on your net mining income, not the gross mining income that you get.
So for something like an airdrop, would that be pretty holy profit because there isn't as much equipment necessary?
So airdrop, actually, IRS addressed this issue to Revenue Ruling 2019-24, which came out on October 9, 2019. So the IRS is saying that if you get an airdrop coin, by the way, the IRS definition of airdrops is a little different than the industry definition of airdrops. So let me tell you those two things. So in the in the real world, if you talk to somebody who knows about this space, airdrop is something that you get as a result of like a marketing campaign or something like that. So in that case, uh, most likely that airdrop coin you had recognized as taxable income, and it should be ordinary income, depending on the facts and circumstances of each situation. The second case is that IRS is saying that sometimes you get these coins airdrop as after you go through a hard fork. Again, like I mentioned earlier, the IRS definition of airdrops are different. So in those cases, meaning let's say you go through a hard fork and you had the Bitcoin and then you ended up with the BSV and BCH. IRS is saying that you had to recognize income for the new coin that you received as ordinary income.
Interesting. Okay, that makes sense. Um, would there be sort of a case? So if what if there was sort of an exchange of value there? Like if you were exchanging some good or service for the token that wasn't cash, would that be considered an airdrop, or would that be considered a transaction that's somehow taxed?
It would be considered just a regular transaction. It wouldn't be considered an airdrop. You know, especially it's not an airdrop in terms of the IRS. Uh, and personally, from what I've heard and from what I've experienced in the industry, an airdrop happens when when you get like certain amount of coins or a token, as a result of being an early adapter or as a result of like a marketing campaign. So you go talk to other people about airdrop. So those are the two definitions of airdrops that I think is true given the market conditions.
Yeah, no, absolutely. Yeah, that makes sense. Let's see. I don't have too many other questions. Is there anything you specifically wanted to touch on that you think people should know about?
Yeah, so I think the point that I want you guys to get is that, uh, you know, I don't think anybody likes paying taxes, but especially considering, what IRS is doing and the Schedule 1 question, because it's asking you specifically, have you even remotely touched cryptocurrencies? And you had to answer this question. And when you answer this question and when you file the return, under penalty and perjury, you're saying that every information that you have reported in that return, including the answer to the Schedule 1 question, is right. So if you falsify this question, you're showing an intention to you're intentionally, giving wrong information to the government, which is very bad for you, in the future. So my point is that, just answer this question correctly. If you have any trades or any taxable events, just calculate the gains and losses using a software like CoinTracker, and just, pay your fair share of taxes. And also don't forget to get advantage of these tax saving strategies like tax loss harvesting, self-directed crypto IRA, and etc. And as a matter of fact, I actually
Yeah.
wrote like a series of articles on Forbes, which I may be able to share with you in the description of this podcast, where
Yeah,
I
absolutely.
break down everything, the taxable and non-taxable transactions related to cryptocurrency, transactions.
Yeah, that would be great. I'll definitely post those in the description for you. Sort of last question would be, are you aware of people who are currently getting audited as a result of their crypto returns?
Yeah, there's few. So especially those people who got those 10,000 letters and who didn't bother to respond to those letters. Those people are getting audited. There's another case that one of my colleagues is handling with regarding a valuation of a crypto donation, which was a big amount. And then there are some of my colleagues that are dealing with the like-kind exchange rate, and IRS is saying that it shouldn't have been applied, but the taxpayer is saying that it was applicable. So those cases are in the courts, and it's interesting to see their outcome, but they haven't been settled yet.
Well, that actually just brought up one last question. So what is sort of the how does it work if you're donating crypto? We talked to some companies that specifically help people donate crypto to nonprofits. So what are the considerations there if you're planning to do
Yeah,
that?
yeah. So the crypto donations, they're treated as very similar to non-cash donations in the regular world. So if you donate crypto, and if you held that crypto for less than a year, you get the fair market value of the deduction. I'm sorry, the if you have held the crypto for more than 12 months, you get the deduction equivalent to the fair market value of the crypto at the time of the donation. If you held the crypto for less than 12 months, you get the lesser of the cost basis, so the fair market value of the crypto at the time of the donations. Again, it's really hard to track these things. If you're donating, multiple units, which were acquired in different time zones and in the different cost bases.
Yeah, I was gonna say,
Yeah,
how do you calculate the exact time and fair market value
exactly.
since it swings every couple
So
minutes?
that's the reason why you need a coin tracking software. Not only to calculate your gains and losses, it also tracks your donations. It tracks your gifts, because gifts is another issue that people have problems with, because gifts create a taxable event, sometimes for the recipient and sometimes in the future when you get rid of that gifts. And also, what about payments? If you pay a contractor or employees, how do you track those gains and losses? Because every time you pay somebody, it's a capital gain or capital loss event. And what about when you buy something or
Yeah.
buy something at Starbucks or something? That's a capital gain or capital loss event. And then mining, of course. And all these things are captured automatically in crypto tax softwares like CoinTracker.
Awesome. Well, thank you so much for coming on to tell us a little bit about that and get our listeners up to date so that they don't get any IRS people knocking on their door. I think that's that's always helpful to have, and I'm sure they'll be very appreciative of the time you're giving
Yeah,
us.
thanks for having me. Looking forward to join with you guys in the future as well. And make sure you get advantage of the free tier of CoinTracker.io. If you have less than 200 transactions in any given year, it's completely free. File your taxes. Yeah, and have a good tax season.
Awesome. Well, on that note, thank you guys so much for listening, and we'll be back soon with another episode. And thanks for joining us today, Shehan. We
Thank you.
appreciate it. Alrighty.